Good morning, friends. Now let us take up on to MCQ question number 10. Mr. Rajesh and Brijesh, resident individuals, are due to receive rupees 12 lakhs each on 1/4/2021 on maturity of life insurance policy taken on 31/3/2012 and 1/4/2012 respectively. The sum assured of which is rupees 10 lakhs. They had paid an annual premium of 1.1 lakh each. Or provisions of tax deduction at source attracted on maturity proceeds received by Mr. Rajesh and Brijesh. Yes, tax is deductible at source on maturity proceeds receivable by both Rajesh and Mr. Brijesh, since the annual premium is more than 1 lakh, being 10% of Rs 10 lakhs. No, tax is not deductible at source on maturity proceeds receivable by either Rajesh or Brijesh, since the annual premium is less than lakh and 20,000, being 10% of rupees 12 lakhs. No tax is deductible at source on maturity proceeds receivable by Rajesh. Tax is deductible at source on maturity proceeds received by Brijesh, and the tax deductible at source is rupees 12,000. Now let's have a look at one more alternative that we have in the next page. D. No tax is deductible at source on maturity proceeds receivable by Mr. Rajesh. Tax is deductible at source on proceeds received by Mr. Brijesh, and tax deductible at source is rupees 10,500. Say, to answer to this question, say we need to know something about the allowability of the premium under 80C and the newly introduced tedious provision, the exemption provision that we have on 1010D. So let me repeat. To answer to this question, we need to have a sound knowledge on the applicability of or the eligibility of insurance premium, which will be allowed under 80C. So for that matter, we'll just go to chapter number 11 on to 80C deduction, premium paid in respect of life insurance policy. Premium paid on life insurance policy on the life of individual spouse or any child, minor or major, and in the case of HU of any member thereon. This will include a life policy and an endowment policy. So here, the proceeds what they get from life insurance policy that they have taken up is exempt under section 1010D. So in order to find no tax is deducted on the proceeds, we should have paid the premium as prescribed in this particular section. What is that? If the policy were to be taken before 1/4/2003, any sum received under LIP, life insurance policy, including the sum allocated by way of bonus, is exempt. It is not only the sum assured, but also the bonus if the policy were to be taken by 1/4/2003. By looking into the question, we understand Rajesh had taken it by 31/3/2012. Brijesh had taken by 1/4/2012. Now let us have a close look at the next table, the next row in that table. In respect of policies issued between 1/4/3 to 31/3/12. So what they have just given is 20% of the sum assured can be paid as annual premium. So now let us have a look at the sum assured. Sum assured 10 lakhs, 20% on that is 2 lakhs. So therefore, what Rajesh had paid as 1.1 lakhs is less than 20%. Therefore, the entire amount, there is any sum received under LIP, including the sum allocated by way of bonus, is exempt. Any sum, there is no threshold. However, exemption would not be available if the premium payable for any of the years during the term of the policy exceeds 20% of the actual sum assured. It had not exceeded. So therefore, that alternative says that Rajesh is not to be subjected for TDS. Is correct. So here the first one they say tax is deductible at source on maturity proceeds. This cannot be correct. Tax is not deductible on maturity proceeds either for Rajesh or Brijesh. So for Brijesh, it cannot be appropriate. Look into that. For the one policy is taken on or after 1/4/12 to 1/4/13. 10 percentage is what they given. Look into that case where Brijesh paid 10 percentage on the sum assured would mean he should have paid only 1 lakh, whereas he had paid 1.1 lakhs. So therefore, he is subjected to TDS. So now from the alternatives that we have, what they have said is that both of them are not subjected for TDS. This provision is also not applicable. This alternative is also not applicable. It is now seeming to come between C and D. Here they talk about Brijesh, and for him the TDS is 12,000. In the next alternative, it is coming to 10,500. To know about how much is the rate of deduction, on what basis that percentage has got to be applied. Now let us just go through chapter number 15. What they mentioned is 5% they have mentioned. They have also mentioned the threshold as 1 lakh. What is that 1 lakh? 1 lakh or more regarding proceeds. By looking into the question, we understand that what they have received is 12 lakhs. So which exceeded 1 lakh. So quite naturally, when the payment of premia is exceeding that threshold points, TDS will be applicable. Now let us just know about that 5%. Even the threshold 1 lakh also exceeded. Now 5% on what? Now let us have a look at this 194 DA will be applicable at the rate of 5% on the amount of income comprised therein after deducting the amount of insurance premium paid by the resident assessee from the total sum received. So we would like to take up the case in this fashion. Sum received is 12 lakhs. So less premium paid. What is that premium he paid? From 1/4 2012, 13, 14, 15, 16, 17, 18, 19 and 20 only he would have paid, because 1/4/21 he would be receiving. That is what they have said. So how many payments he had made? 1, 2, 3, 4, 5, 6, 7, 8 and 9. How much did he pay each year? 1.1 lakh. So 9,90,000 is the sum that he had paid. How come? 1.1 into 9. So what is the difference between the two? So which is 2 lakh and 10,000. The rate is 5%. By applying 5% on 2 lakh and 10,000, it comes to 10,500. So what we have seen as 10,500, which is given as the last alternative, is correct. So to summarize this particular alternative, I would like to put out an understanding this way. What is that? Receipt of money from LIC, that is life insurance policy. I will not say LIC, life insurance policy. So this is upon maturity. They are talking about 10%, 20%, 15% for physically challenged people and all that. So satisfied is what I'm asking. That percentage on sum assured, is that satisfied is the question. If yes, so it is exempt under section 1010D. No TDS will be applicable. If it is no, the next question, proceeds less than 1 lakh. Yes, would mean no TDS. TDS provision will not be applicable, but income will be admitted. If it is no, that means greater than or equal to 1 lakh would mean no exemption is available. TDS under section, what is the section under which it is to be taken up? TDS under 194 DA is applicable. What is the rate? 5% on sum received minus amount paid till maturity. When you take up, there will be a difference. You will get 5% on that is to be applied. So thereby, in this particular case, alternative D is the appropriate alternative. So I consider that this question is really a good question. Mark this question as very important. Thank you.